The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Monday the 27th, 30 to the close. What do you need to know out of Europe? Well, the SPD's Olaf Scholz claims a mandate to lead after an inconclusive German election. We're going to be in Berlin with the latest in just a moment. The UK's fuel crisis continues with up to 90% of petrol stations apparently running dry. Gas stations. Let me translate that for you. Ministers met this morning with Boris Johnson, the Prime Minister. There are discussions about bringing the army in. There are industry discussions taking place, I understand, this afternoon. And EV maker Polestar agrees to go public via a SPAC in a deal that will give the Volvo-backed car firm a $20 billion valuation. The company's CEO, Thomas Ingenlath, is going to join us this hour. Let's take a look at equity markets. Where are we? We're rolling off the top. Equities are now negative. Energy's doing fairly well. The banking sector's looking fairly solid as well. Take a look at what is happening in the energy markets more specifically, and you'll see the crude is flirting with $80 a barrel. 79.53 TI at 75. Alex.
Yeah, huge, which leads me to my board, which is the energy crisis. So first, just take a look at the last three. We got energy index in the S&P, still the outperformer, up by almost 3 percentage points. Financials, the third best performing sector. Occidental, still the best performing stock within the S&P. And it's not just energy. Natural gas prices here in the U.S. continue to push higher here, almost 8%. There's a conversation evolving in the analyst community as to how much more these prices have to move. Citi says that once you get past winter, though, you could see a material fall in gas prices. Market currently not necessarily priced for that. Now let's get to what that means for the reflation trade. Sell-off in the bond market, yields pushing higher. The 530 spread, remember last week we were at 98 basis points? Now we're almost at 103. And all of that winds up spelling some short-term iffiness for NASDAQ 100, causing a really big headache for those big FANG stocks. Amazon getting a downgrade today because of labor costs. There's that, plus those higher yields putting a damper on those growth stocks, all playing in to some choppy trading that we're seeing on this Monday, Guy.
Short-term iffiness.
Yeah.
That kind of sums up the German election as well, to be honest. Olaf Scholz making his pitch to the Greens and the Free Democrats to form a three-way coalition following his incredibly slim victory in Sunday's election. This will be the first time in the country's history that we've had a three-party coalition potentially being formed.
We will be very fast in getting a result for this government, and it should be before Christmas if possible. On the other hand, you should know Germany always has coalition governments.
All right, here with the latest is Bloomberg government reporter Patrick Donahue. All right, Patrick, give us the latest. Where are we?
We're not very far beyond that. You just saw Olaf Scholz claiming the mandate to form a government. Of course, his party won the election, although it was very close. The SPD have 10 more seats in the Bundestag than the conservatives, CDU, CSU. Since then, we've had Armin Laschet, who was the candidate for the CDU to succeed Angela Merkel. Last night, he basically said he would also be willing to form a government. This turned into some different language today. Now Laschet is saying that he's not claiming a mandate for the government, but he's going to still try to do it, particularly if Scholz's attempts fail. So he's going to try to stick around.
Yep. Patrick, how long will he give him? What's the timeline here?
Well, you've heard Scholz by Christmas, so 3 months. I think, you know, with most coalition agreements, it's been 2 months, 3 months. The big exception, of course, was 4 years ago when it took 6 months. But that was because in the first round of talks to form a coalition between, you know, Merkel oversaw the attempts to form a coalition with the Greens and FDP. That failed when the FDP pulled out, and the Social Democrats were reluctantly pushed into another grand coalition, as we like to call it. The government was finally sworn in March, but once things get on track here, you can expect preliminary talks that would probably take up most of October before going into official talks. In Germany, you basically have to draft a coalition accord that is a book-length blueprint for what the next government is going to do.
It's going to be a fun few months. Patrick, we look forward to the coverage. Thank you very much indeed. Patrick Donoghue joining us from Berlin. Let's bring another voice into the conversation. Teneo Managing Director Carsten Nickel is with us now. So a traffic light government looks now the most likely, i.e. the SPD, the Greens and the FDP. Carsten, how would you handicap that working?
Well, I think we're going to get a first idea of that already during these exploratory talks. And actually, the interesting news there is that yesterday evening, the two smaller parties, the center-right Liberals and the Greens, were indicating that they would actually start two-way talks, first of all, between the two of them, deciding, which way they want to go, whether they want to offer coalition talks, so to speak, to the SPD of Olaf Scholz or to the CDU. I think since then it's sunk in that the momentum is really with the Social Democrats. But let's make no mistake. I mean, in the end, the Greens and the FDP, they're really pulling basically programmatically in different directions. And that could be a difficult ride. So what kind of specific horse trading do you think that we could see then? Maybe from the Greens, like give us this and I'll give you that kind of thing. Yeah, I think the big question is basically how are we going to finance the green transformation that the German economy, all parties agree on that, need. If it was down just to the Greens and the Social Democrats, then we would probably see a larger role for the public sector here, perhaps even somewhat greater fiscal largesse. But given that the FDP is involved, I mean, you're dealing with a party that is fairly, well, pro-austerity and fiscal discipline here. So I think it will be all about, finding market mechanisms and bringing businesses in. I think that's what the FDP will be looking at. The FDP have blown things up in the past because they didn't get the finance ministry. Are they going to get the finance ministry? Yeah, I think that's fairly likely. I mean, the FDP have been pretty clear in the beginning that this is what they want, and fiscal discipline is really the one area on which they will have to leave their mark if they're joining a coalition with these two parties that are overall seen as fairly center-left. How long do you think it's going to take to get these kind of results, and how much uncertainty does it yield? I mean, it feels like a silly question, but just in terms of how and when we start pricing this in, we're going to be talking about that in just a second. In the meantime, will we see volatility? Do people just not care yet until there's something official? No, I don't think that's a silly question at all. I mean, really, we have to look at 4 years back, where we only months into these negotiations basically figured out that this three-way coalition that they were trying to negotiate back then wouldn't fly. So I think the lesson from that is really we have to wait until the very end of this process, and these talks could still fail, and then we would have to go back to the drawing board and look for an alternative solution. Carsten, as you say, this will be a fairly weighty document that ultimately is constructed here as the basis, the foundation of this coalition. How stable will it be, though? There are going to be so many compromises in that document, and I wonder how kind of easy it's going to be to knock it off course. Yeah, there's going to be compromises in that document. That's exactly right. And then there's the second thing. Obviously, you never know what politics brings over a 4-year duration, right? Nobody would have expected that this government, the outgoing government now, deals with a pandemic of a global scale. Now, how do you handle that? That wasn't written down in the current coalition agreement. So I think, something like personal trust between the parties, I think that in the end will be much more important than what is written down in detail in this weighty document. For a broader European sense, do we get a tighter fiscal union, or at least the framework for it, if we do get this coalition, the traffic light coalition? Well, there were all these expectations that with a social democratic chancellor, we're looking at big spending, closer integration, and all of that. I was always fairly skeptical of that. And again, I think with the FDP involved, perhaps in control of the finance ministry, I think we're going to get a step-by-step approach, and certainly not a major leap forward here towards closer fiscal integration. So what does that mean? We're facing quite a lot of uncertainty in Europe at the moment. We're going to have a relatively unstable German coalition. I would never try this before. It's a three-way coalition. Plenty of things can go wrong. We've got a French election coming up that we still don't know ultimately which way it's going to go. And again, could be really quite tight. From a policy perspective, we're still emerging from a pandemic. We've got an energy crisis that is now increasingly gripping Europe. It could be a really difficult winter. Does Europe have the political leadership to navigate all of this?
and deal with China and figure out what its geopolitical position is in the world. Europe feels relatively rudderless right now, or more rudderless than it maybe normally is.
Yeah, I think we have to differentiate. If we're looking at grand geopolitical strategy and these kind of issues, I think we have to go back to that question in a year from now when we know who's in charge in France, and then we have the new government up and running in Germany as well. I think in the short term, at least, what we can draw some positivity from is the fact that on the German side, we're dealing with fairly experienced politicians, whether it's Armin Laschet or Olaf Scholz. So in terms of short-term crisis management, I wouldn't be too concerned. But if you're looking for grand strategy, let's get back to that in a year from now.
Okay. Carsten, always a pleasure. Interesting analysis. Thank you very much. It's going to be a long, drawn-out process. Carsten Nickel of Teneo joining us there. We're getting a bit of a reaction in the gilt markets. Some comments. I think this is actually some written text ahead of a speech that Andrew Bailey, the governor of the Bank of England, is delivering. Bailey's talking about inflation. The governor's talking about inflation, and he says the response to inflation will be via rates. So that's interesting because the UK rate market at the moment, Alex, is focusing on this idea that we should go QE taper, then rates, and that started to become a little bit more blurred over the last few days post the last meeting, and it now looks as if Bailey's pointing us in the direction of a rate response if we do get an inflationary problem. And the UK, probably more than many developed markets at the moment, is facing the potential for that, given the kind of shortages and extremes we're seeing in this country right now.
But in some ways, more of an error for policy mistake because of the effects of Brexit, for example, like the petrol lines and the lorry drivers. Because I did find it interesting that Bailey, in the text of the speech, said the monetary policy cannot boost supply of chips or drivers. Like, there's literally only so much they can do. They just kind of, at this point, have to avoid a policy mistake that would make everything worse.
Yeah, he's talked about that in the past. He's talked about the idea that monetary policy can't fix the supply side problem that we are currently experiencing and can't deal with. And that's interesting because maybe this is the first kind of real recognition that actually maybe monetary policy has reached its limits. A recognition of the reality that maybe all this QE hasn't done anything really to solve some of the economic problems that we're facing that are supply side driven. What it has done clearly is boosted asset prices. Yeah,
exactly. Question, did you fill up your car this weekend? Like, have you noticed lines or anything happening?
I made a massive tactical error. I was bringing my kids back and some other children back from a rugby game on Saturday morning. I drove past a petrol station on the A3, one of the big kind of, it's not a motorway, but it's a fairly large road. It had very few cars in it. I didn't stop. I regret that deeply.
I mean, if 1/3 of petrol stations were closed here, I mean, I genuinely cannot imagine what that would mean.
It's more than
for
that.
the US.
It's way more than 1/3. I heard this morning it was somewhere near sort of 90% of petrol stations are experiencing problems. I don't know what the exact figure. That may be just off the top of my head. Anyway, it is a big supply side problem for the UK economy. Another thing that could potentially sort of throttle back growth. Is this a reflation trade or is this a stagflation trade? This is Bloomberg.
We were just talking about it. It's going to be months before Germany's Olaf Scholz could lock in a coalition deal. So what does it mean for the actual market players? Christian Keller, Barclays head of economics research, joins us now. So let's just say we get a traffic light coalition, the SPD, the Greens, and the FDP. What does that mean for an allocation in your portfolio? Like, what do you buy on that? What do you have to sell on that?
Well, first of all, I think, a German election was never really to create any large short-term movements in asset allocation or even in certain asset prices. I think, we do look here at something that could influence Germany and Europe maybe over the medium to longer term. So I think, to expect overnight any sharp reaction, that was never the case. I think interesting what did happen is some of the tail risk scenarios where markets may have reacted more abruptly would have been, for example, suddenly the possibility of a red coalition. That is no longer a possibility. Now, for traffic light coalition, I think markets will look for now the compromise that you spoke about earlier between, in particular, the Greens and the FDP, which are at the opposite of the spectrum. How much spending will I get in which areas? Probably largely in green areas, decarbonization, digital spending is something everyone can agree on. What is probably off the table is some of the tax hikes, like wealth tax, and also some of the more aggressive intervention in, for example, real estate markets, which someone in the Greens and also on the left in the SPD would favor. So overall, I think this is a pro-growth, a relatively positive message, really, for equity. Whether it influences, the rates market much remains to be seen. Really, over time, we see bond yields going higher, but that would probably happen independently. But it does look as if Germany overall will become a country that is, spending more, will become a bit more domestic demand driven, rather than being purely focused on those export-driven growth that we've seen over a decade now.
Can I bring it? I want to kind of bring in the conversation that we were just having just a moment ago, Alex and I, about what Andrew Bailey was signalling at the Bank of England. If you're Christine Lagarde and you're looking at that kind of scenario that you just laid out, what are the monetary policy implications? A slightly stronger spend out of Germany, is that enough to allow you potentially to accelerate or at least keep on track plans to withdraw some of the monetary stimulus that has been delivered during the crisis?
I think the ECB will very closely follow what's happening on the fiscal side. And that is, first of all, for Germany, but also what the Europeans will do with their fiscal rule that has been suspended now for another year. But in 2023, the Europeans have to decide whether to go back to it or whether to change it and how to modify it. And there, for example, a different German government could play a role and could, in a way, nudge things a bit, towards loosening up the rules a bit. And in particular, if Germany itself starts to spend a bit more, maybe, finds ways to go around its own debt brake, which probably won't be changed, but there are ways to do some spending outside of the debt brake. I think those things will add up. The ECB will follow it closely, but I think they will be very careful not to assume anything before it's really, really decided.
I mean, fair point. But the idea that we're going to get the impulse for more spending seems to be the prevailing theme coming out of the elections. But I wonder if we learned anything about how fragmented the political landscape is. I mean, just the fact that we had to have a three-party coalition seems very dramatic. Are we more fractious than we're sort of making it out to be, that maybe just more fiscal spend isn't 100% a done deal?
Well, I think there is great agreement on to spend more in general. And I think public investment is something that's on everyone's agenda, in particular when it comes to digitization, where Germany is far behind. But I do think when it comes to how to implement greener policy, how to abruptly on some of the decarbonization efforts, how to finance it, whether through taxes or whether maybe through larger deficits. I think there is a lot of disagreement. And I think between the Greens and the FDP in particular, the disagreements are the largest. That's why that discussion that will happen over the next few days and weeks is probably crucial. I think the point that we may get a more pro-European German government, but at the same time one that is probably less united and less powerful than Merkel was, that is a good one. That's a fair one. So maybe you get the right attitude, but you may not get the kind of forceful Merkel policy that you had before.
Just before I let you go, Christian, can I just get your take on those comments from Andrew Bailey? The response to inflation, if needed, will be via rates. Everybody else has got the sequencing really clear. We're going to taper QE, then we're going to raise rates. The Bank of England seems to be getting in a muddle here about how the sequencing is going to potentially work. It's getting a lot more blurred.
That is true. And I think, people were already quite confused about last week's MPC meeting. I think they had hoped for some clarity from the speech today from the governor. I haven't seen the transcript yet, but it is true that typically all the central banks like to first get out of the longer end, which is QE, buying longer-term bonds, before starting the short-term rates. I would say, though, the Bank of England always has been a bit different. They didn't say how much they buy monthly. They always gave themselves, a stock they wanted to buy. So that has always given them a bit more leeway. But it is an interesting step, and I do think, I heard earlier the word policy mistake. I think, that will be on people's minds, in a situation where prices are high, but the economy could weaken relatively abruptly. The question is, whether unexpected or earlier rate hikes are really the right response.
I'll give you the quote from the statement. I've just got it here. The monetary policy response, if we need to make one, to the inflation pressure should involve bank rate, not QE. There is no reason to beat about the bush on this point. Christian, it's going to provide a lot of opportunity to discuss how maybe the BOE is diverging. Thanks for your time today. We really appreciate it. Christian Keller, of Barclays, Head of Economic Research. This is Bloomberg.
Over the next few days, Google is going to fight really hard in European court to counter an antitrust suit that could see a $5 billion fine. At the same time, YouTube in particular is saying that free speech is a very core value for the company, particularly when it comes to Russia. Google and Apple both polling a voting app from opposition leader Alexei Navalny before Russia's election. Now, that led to the criticism that they caved into Kremlin demands. Now, YouTube removed some of Navalny's videos after Russian government requests came in. CEO Susan Wojcicki spoke to Bloomberg's Emily Chang.
We certainly get requests from governments, and we look and consider what's, why are we getting the request, what's actually happening on the ground, and based on a whole bunch of different factors, we make a decision. So we don't always, those are not always requests that make sense for us to honor, but in certain cases, we will honor them in that country.
Wojcicki declined to comment on those specific requests, though, from Russian officials. But, Guy, if you bring it back to what's happening over in Europe as well, Google's fighting on a lot of fronts in different ways. And this antitrust fine, maybe the case is going to drag on, but that's some serious cash that could be at risk.
So you've got, these are very different stories, and in some ways they are related. I think the Navalny story, I think, is... No, I'm trying to kind of sort of dovetail the two together, as you have tried as well.
So hard.
I think the umbrella is Google, but clearly Google, and I think this is going to be a problem for all companies. You're dealing with China, you're dealing with Russia, you've got your constituency back at home, which has got a very different attitude to all of this. It's a really difficult challenge, and I think a number of different companies in the banking sector, to the apparel companies, to the gaming companies are all dealing with this with China. Then there's this issue of sort of Google and installing Android onto phones, which is really difficult as well. I'm not sure I can draw a line between the two.
How about
we've had
big tech and governments?
Very good attempt to it.
Big tech and governments.
Okay, we'll go with that. We're going to talk to Polestar. We've got a SPAC coming up. This is Bloomberg. So we're wrapping up the Monday session here in Europe. We're definitely off our highs. We've been fading actually throughout most of the day. But as you can see, there is still a little bit of green to be found on this side of the Atlantic. The FTSE's up 0.2%, CAC's up by 0.2%, DAX is up by around 0.3%. The IBEX is the standout story, but basically the main markets are just keeping their head above water. Let's talk about how the session develops. You can kind of see the impact of the US session, which has turned out to be a little bit more negative, I think, in terms of the impact. You can see that kind of coming in here. We spent most of the afternoon in negative territory. We were basically just flirting with the flat line. But nevertheless, looks like we're going to come through at the end of the day right on that. At the moment, the Stoxx 600 is down by 0.1%. Other assets certainly maybe a little bit more exciting than equities today. Germany, we're watching what is happening there. A bit of a sell-off in the bond market globally, but the German election, a factor to think about, though it's going to have a long a sort of gestation period in terms of the impact. We don't know what the government is going to look like out of Germany. Gas futures in the UK up another 9% today. So we're facing a two-pronged energy crisis here in the UK. We've got panic buying at petrol stations. We're going to talk to an EV maker in a few moments' time. Maybe this is an opportunity to think about an electric car. And then we've got the gas story with super high gas prices. Both of these two coming together to really put a squeeze on the UK consumer. That translates into Brent. Brent is just flirting with $80 a barrel. TI over in the States at kind of 75, circa 75. 79.58 is where we're trading on Brent crude right now. How does it break down from a sector point of view? Energy's having a great day. European banks are having a great day. They're both right up at the top, as you can see. Energy's up by nearly 3%. The banking sector's up by nearly 3% as well, 2.71. Technology's down at the bottom. Healthcare's down at the bottom. The luxury stocks are down at the bottom. So that's where the weakness is coming through. But they're basically, in terms of weighting, fairly evenly matched. Individual stocks, there's plenty to talk about here. Rolls-Royce, the jet engine maker, not to be confused with obviously the car maker down in Chichester. So Rolls-Royce, a couple of things happening here. One of which it's spinning off a division to private equity. The other one is that it signed a deal with the US Air Force to retrofit B-52s with new engines. Just a kind of bit of history here. The B-52, I think, entered service in the mid-50s. So this is an incredible kind of story in terms of continuing to re-engineer and improve an existing airframe. But Rolls-Royce is going to be doing that for the US Air Force. The life cycle here, I think, is going to be something like 30 years. So you think about the spare parts over 30 years. That's an incredible annuity in terms of the kind of the way that the deal works. Wizz Air, travel stocks generally feeling fairly positive today. Wizz Air, just one of them, up by 5% today. And IWG, this is the flexible office solution company, potentially, Mr. Dixon, potentially looking to break this company up. So what you may have is a sum of the parts valuation story here. IWG up by 4.99%, Alex.
All right, we've been talking about this for the last couple hours. EV maker backed by Volvo and Leonardo DiCaprio, Polestar is going public through a merger with blank check company Gores Guggenheim. Now, the transaction is going to imply a $20 billion enterprise valuation. Let's dig into that with Thomas Engelath, a Polestar CEO. He joins us now. First of all, congrats. It's been a tough time for SPACs, so congrats on getting it done. Because we're TV, I got to ask about Leonardo DiCaprio. How did that relationship start? How did the conversations evolve? How did that happen?
Well, one of the strong stories that is inherent to Polestar is sustainability, the journey towards zero emission. It's core of our company. And obviously, that is very well known. It's as well very important for Leo. So him and us being joined on that journey, him investing in our company, obviously that makes sense from both sides.
Okay, a couple of things to say here, Thomas. First of all, Alex was ridiculing me earlier on for calling him Leo. Obviously, those close to him are called Leo. The second thing is, I bet you didn't expect this conversation to start with a conversation about Leo DiCaprio. Let's talk a little bit about the SPAC. What are you going to use the money for? How does this help you on your journey?
Well, it's a very important, exciting day for Polestar. We have now 2 cars on the road. Yes, we have established our system in 14 markets, but there is a big future ahead with 3 cars coming out over the next 3 years, us expanding into many markets more. There will be 30 markets targeted in 23. And of course, this big growth story, this expansion of the brand is, of course, really, really nicely supported by this injection of capital, but that access to the capital market. So a new chapter for Polestar.
When you come to new chapters, will part of that chapter be building your EVs in China? Polestar 2 EV now has a 27% import tariff in the U.S. because it's built in China. How quickly and how aggressively would you be looking to build plants elsewhere?
Well, we already were outspoken about the plan for the next car, the Polestar 3, being produced as well in South Carolina. And this Charleston factory is up and running, so us implementing the Polestar 3 will be important first step of Polestar, and very, very much a very simple way of us utilizing that manufacturing footprint that exists within the Volvo Group. We clearly have that advantage. We can leverage this existing footprint, not only when it comes to manufacturing, as well as having 500 service points already today and bringing this to the number of 800. This is, of course, possible because we can use this infrastructure that exists in the group. We will be producing American cars in America for the American customers. This is as well what will happen over the course of time here in Europe. not only for financial reasons or geopolitical reasons, it's as well very truly important for a company that takes sustainability serious. It's the most sustainable way of producing car if you do it close to the market.
Thomas, Volvo announced today that it's going to invest another 600 million in you. And I'm wondering what the cash flow position looks like right now in terms of your expansion. The SPAC obviously is going to take a while to get done. And obviously there is going to be a gap therefore before you get that financing. Is that what that 600 million is designed to do? Is basically that an investment to hold you over until the SPAC cash effectively kicks in?
No,
Okay, I think we may have lost Thomas, which is
for the future.
Upsetting because I was hoping to, oh no, there he is. I think we may leave it there. Thomas, unfortunately, we're going to have to leave it there. I think we are experiencing some technical difficulties, which is a huge shame. This is a great story in terms of what is happening here. Alex, what I think is also fascinating is the 20 billion valuation that we've got with Polestar. There's some talk that Volvo, the company which this was spun out of, and Polestar effectively is the AMG of Volvo, and Volvo could end up with the same kind of valuation, which kind of just talks about kind of legacy assets and super clean new EV assets.
Which on the flip side, if you just compare Polestar to other EV companies like Rivian, could be valued at about $70 billion, right? Tesla's worth $770 billion, yep, which makes the 20 billion feel like some chump change when you compare it to the other pure plays in that respect. More conservative valuation.
Absolutely. And the difference is as well is that they've actually got two cars, as you say, in the market, which obviously is this isn't a we're going to need a lot of money to ramp this thing up. No, we're already starting to produce these vehicles. But as you say, that valuation gap is quite significant. We've moved beyond valuing these companies just as car companies, it seems. I think we may be valuing them as software companies, which is a completely different ballgame. Anyway, let's park this for a moment to excuse the pun and talk a little bit about what is happening with the close of play here in Europe. We are through the auction. These are the final numbers here in Europe. So you can see a little bit of a pop coming through during the auction, but it's a fairly flat session. Actually, we spent most of the day, Alex, this afternoon kind of in and out of positive and negative territory. Yeah, the market's really trying to understand what the energy and power crisis that's spreading globally means for their portfolio. To me, it's just one more part of the supply and demand mismatch that we've been seeing all over the globe in different sectors. So let's examine one of them. Coming up next, we're going to talk to the executive director, Gene Soroka, of the Port of LA next. Talk about congestion. LA Port's front and center. We'll break that down. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Ritika Gupta, and you're looking at a live shot in the principal room. Coming up, we have Atlanta Hawks co-owner Grant Hill. That's at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
Live from New York, I'm Alex Steele with Guy Johnson over in London. This is the European close on Bloomberg Markets. You can't be an investor today without talking about the huge supply and demand mismatch. And right now, 62 ships are still waiting to dock at LA Port. Now, the Port of Long Beach is already doing 24-hour operations Monday through Thursday to ease that logjam. And while the Port of LA, which is the busiest port in North America, is focusing on improving efficiency, Bloomberg's Ed Ludlow is reporting all day from down there with the port's executive director. Hey, Ed.
Yeah, that's right. We're joined by Gene Soroka, who is the executive director of the Port of LA, where 40% of the US container imports come into and 30% of exports go out. Gene, thank you very much for having us here at the port. Where are the pressure points?
All throughout the supply chain. Asia factory output is at record highs, yet we're still behind on orders. Increases as much as 30% in vessel capacity in the Trans-Pacific have been deployed, yet we still don't have enough space. Cargo coming here to the port is like taking 10 lanes of freeway traffic and compressing them into 5. Cargo is sitting for longer at the port than normal, as it is at warehouses. We need to speed the velocity throughout the domestic supply chain as well.
Is the issue here infrastructure? If you speak to the container liners, they'll say that the COVID-19 pandemic has basically exposed shortcomings in ports like LA. Is that what the problem is here?
There's no one answer, Ed, but infrastructure has been a topic of discussion for some time out here. In fact, over the last decade, The U.S. federal government and Congress has outinvested the West Coast ports at a rate of 11-to-1. That's more than $11 billion that's gone to the East and Gulf Coast versus a little more than $1 billion here on the West Coast. That has to change.
Talk to me about labor pressures. You have a lot of different arms of the port working in synchrony, the dock workers, the truck drivers, and the warehouse. What is the story there?
Three segments of labor, basically. One are our dock workers, and they've been out on the job an average of 6 days a week since the pandemic began. Second is the fact that that work being done on the docks has improved vessel productivity by 50% since the surge started last summertime. We're moving more containers on and off ships on average per call than any other port in the world. Second, the truck drivers. Only about 50% of all truck drivers are calling here at least once a week, those that are registered. And while vessel capacity has increased by 30%, truck capacity has increased by only 8%. The last segment is the warehouse worker. We've got more than 2 billion square feet of warehousing from the shores of the Pacific out to the desert region. They're overflowing with cargo, need more folks on the job, and need to expand their work hours just like everyone else.
Well, so the final question for me then is, how does this all get better? Do we just need to make more investments in infrastructure? Is this an issue of hiring more? Is the federal government getting involved? How do we fix this problem long-term, Gene?
Yeah, short and long-term answers, Ed. Number one, the federal government is involved at the highest levels. The president's executive order on supply chain, including the look at certain commodities like agriculture, is front and center every day. Bringing on Port Envoy John Picari, the former U.S. Department of Transportation Deputy Secretary and Secretary of Transportation in Maryland, has been an absolute light on the subject and has been working around the clock to help us out as well.
Hey, Gene.
In addition, what we need...
Sorry, Gene,
Yes.
I apologize. You were finishing.
Yeah. In addition, we need to take advantage of the 30% of truck appointments that go unused every day here at the port. That's solved through information sharing. Back to you, Alex.
All right, Gene, thanks a lot. So I was going to ask, I know you don't have a crystal ball necessarily, but are we going to have a Christmas this year? I mean, literally, are the toys for kids going to be in stores? Like, how long is this logjam?
Yeah, stated here, we will have a Christmas. Many of our importers, especially in the retail community, have been very savvy evaluating these supply chain occurrences, and they've pulled forward much of their holiday season inventory. In fact, we began seeing elevated levels of cargo as early as June this year, when normally that happens the end of August or September. I feel confident the retail community will rise to the occasion once again.
Gene, it's Guy. Can I look a little further forward than Christmas? We are clearly seeing a huge amount of demand for your services at the moment. In a year's time, will that demand be as high? If you invest now, are you going to be investing into a slowing market at some point as we start to see some of this extreme demand fading from the system?
Yeah, good to see you, Guy. Great question. What we see is that at some point in the future, the import cargo will plateau. If we can get past the Delta variant, the Mu variant, we'll go back out and start spending discretionary income in the service sector. We're not quite there yet. But at the same time, we see a strong market through an early Lunar New Year in the 1st of February. Retailers are telling me, following that holiday, if there really is one, because of all the work at hand, they're going to focus on replenishment in the second quarter of 2022.
It's also an issue about the point of origin, right? We hear a lot about China. 7 out of 10 of the world's biggest ports are in mainland China, and policymakers there won't hesitate to shut down a port. What is your communication like with the point of origin to know what's coming when it comes to dealing with that backlog?
Yeah, Ed, I worked overseas for 11 years and 4 in China, so I've maintained many of my contacts. And what we've seen are these rolling 3rd and 4th waves of COVID exposure from Vietnam's factory community back up to the port communities in China. It really has not impacted us. We saw one terminal shut down in Ningbo. We saw a slight shutdown of Yantian port, which meant about 50% productivity for 2 weeks. The cargo keeps flowing at record levels, and the productivity is at record levels here at the Port of Los Angeles.
Gene, to jump in again, a final quick question from me maybe. Are you paying your people more? If you are paying your people more, do you think that higher level of wages that you are paying and your contractors within the sites, both the warehouses and on the port, are going to pay more? Do you think that's sticky? Do you think wages go up and stay up?
Guy, I think that's a great question, too. And as you know, we're a landlord port. We lease our properties out to the private sector service providers who bring on labor. What we are seeing is that everyone here who wants a job has a job today, but we've got to get a little bit more activity in the truck area and a lot more in the warehouse community itself. All private sector jobs, which will continue to work with those segments and partners to push forward.
Gene, you're doing critical work. We really thank you for it. Working our way through this backlog, it's going to be fascinating to see what the picture looks like in 6 months' time. Gene Soroka, Executive Director of the Port of LA. And of course, our thanks to my good friend and colleague, Ed Ludlow. Alex, this is going to be the real question, isn't it? That we're trying to figure out whether or not this is a speed bump. We're trying to figure out whether or not this demand that was created for stuff as a result of the pandemic is going to be something that is temporary. How do you define temporary? We still don't know the answers to these questions because at the moment, as we just saw there, huge amount of inventory still sitting offshore.
Yeah, but I mean, at least, hey, he thinks we're going to have a Christmas, so there's that. I guess the question is how much you pay for it. What I thought was interesting with the worker conversation is that, you know, they're filling the jobs. I wondered sort of how quickly or how sticky those employees are. So I was talking to somebody today kind of about the record of that they have a UK hospitality business, for example, and like they keep hiring and those people keep leaving. They keep hiring and they keep leaving, which, you know, you're wasting productivity, you're training people, it's time, it's money, and then they keep going to other places where they can get better pay. And that's sort of like a trick. I don't know how that becomes temporary and transitory.
Well, yeah.
That feels stickier to me.
So, I think you're probably right about the sticky thing, but I also think what you say about productivity could be interesting here. Maybe one of the lasting effects of this is that we do start to see companies investing more in their people. This has always been one of the challenges with the productivity puzzle that we've had. Companies have just had an abundance of labor. The output gap was global, as a result of which they didn't need to invest. Now they do. Maybe this improves the productivity picture.
No, which could have profound, more lasting impacts. All right, well, that's just one day down. There's still a lot coming up in the next week. We'll break it down for you here. This is Bloomberg. All right, we are about 2.5 hours into trading here on Monday. Let's get you all caught up on that market action. Tech trading pretty heavy. Abigail Doolittle is here with us.
It certainly is, Alex. Here are the tech movers. And you say reflation, I say inflation. Here's that inflationary feel. We have tech down in a big way as yields shoot higher. At one point, that 10-year yield above 1.5%. That, of course, brings into question valuation. We saw that earlier this year. It will probably be digested at some point, but then it puts the pressure on what's the next level that hurts. 1.6, 1.7, 1.82. But right now, you see big declines for tech, with a little bit of an exception here for Facebook, down just 0.4%. This, of course, is Instagram is pausing the kids site amid controversy. So Facebook, in some ways, seems to be rewarded for that. As for the reflationary piece, let's take a look at it. It has everything to do with the banks and energy. If we take a look, we are going to see big gains here. JP Morgan Chase, along with Bank of America, both up more than 2%. This is yields are boosting those banks, and the idea that lending is going to be better, net interest margin. And then, of course, energy, oil now back above $75 a barrel, up for a fifth week in a row. Demand is seen, maybe a little bit of a supply crunch. So you can see Occidental Petroleum flying, Guy, up 6.8%. BP as well, up 3.6%. That sector is the top sector on the year, up 35%. And the interesting thing is it's not up as much as oil. So some are saying that the top sector on the year could be still a catch-up trade.
Absolutely. We'll see what happens next year. Maybe the markets, equity markets, looking through what could be a really difficult winter. I'm still struggling with this concept that high yields equals reflation. Anyway, we'll park that for the moment. What do we got in the next 24 hours? New York Fed President John Williams, Fed Governor Lael Brainard. They're going to be speaking later today. Landsat 9 satellite launching. We love a rocket launch here. Alex, tomorrow we move back to the central bank story.
Yep, you got the ECB forum on central banking will be kicking off virtual, but still, Treasury Secretary Janet Yellen and Fed Chair Jay Powell will be testifying before the Senate Banking Committee and then the House on Thursday. That's really the main event of the week, to be honest. Plus, you get Evans and Bullard also speaking tomorrow, and U.S. wholesale inventories, which side note, could be very interesting, talking about what kind of Christmas we're going to have. I mean, if you were buying Christmas stuff, you buy that at the end of the summer, really. But I think the main event, guy, is going to be Yellen and Powell together.
Yep.
A debt limit is going to be so politicized and front and center in that conversation. Absolutely.
We're going to take that live for you, by the way, tomorrow. We are going to be watching that with a great deal of interest, Alex and me. Coming up, Courtney Rosenberg, Strategas Director of Policy Research, joining David on Balance of Power. We're going to radio. This is Bloomberg.